Hello and welcome. I'm Chakshu Roy and you're watching Laws in the Making on Rajya Sabha TV. Today on the show, we are discussing the banning of unregulated deposit schemes Ordinance 2019. Currently, there are several schemes that allow money to be received as loans or advances. This money is called a deposit. Deposit-taking schemes are registered with a regulatory body such as the RBI, SEBI to ensure that no one invests in a fraud scheme. The ordinance bans deposit-taking schemes that have not been registered with any of the regulators. The aim of the ordinance is to protect the interest of investors investing in deposit-taking schemes. To discuss the ordinance, I have on the show with me Mr. T.S. Sivaramakrishnan, President, All India Association of Chit Funds, Mr. Madhukar, former member SEBI, and Mr. Ashok Nag, former advisor, Reserve Bank of India. There are several states in India which have laws banning unregulated deposit schemes. However, there are differences that exist between these state laws. The ordinance aims to tackle the problem of unregulated deposit schemes by creating a law that will enforce all across the country. Anyone found guilty of committing an offence under the ordinance will also have to face a penalty.
Deposits can be received as an advance or a loan. At present, there are several regulators regulating acceptance of money from the public. However, there have been instances of people being duped by illegal deposit schemes run by unauthorized companies. The ordinance specifies punishment for such a violation. It provides for a mechanism to make sure that any person who invested in an illicit scheme gets repaid.
If the deposit is being taken by some entity which is regulated by a recognized regulator, that regulator can be Reserve Bank of India or SEBI or IRDA or Ministry of Corporate Affairs or any other cooperative institution, something like this. If it is being regulated by a regulator, then it is a regulated deposit.
The ordinance defines deposit takers as an individual, a group of individuals or a company who asks for or receives deposits. Banks and entities incorporated under any other law are not included as deposit takers. The penalties under the ordinance for violating the ban on unregulated deposit schemes is applicable to deposit takers.
Financial discipline is very important for any country, especially for a developing country like India. So the key word in this context is the investor protection. Though we have many regulations covering the regulated deposits, we have RBI, we have SEBI, we have PFA, IRDA. There is no proper agency to cover the unregulated deposits. See, the more regulation, more number of violations comes through. People find more loopholes. So these are all the side effects of civilization. The only legislation that we had to cover up the unregulated deposit was Price, Chit and Money Circulation Banning Act 1978, which did not have enough teeth to plug the loophole.
The ordinance makes running, advertising, promoting or accepting money for, defaulting on regulated deposit schemes and inducing someone to invest an unregulated deposit scheme a crime. Each of these crimes is punishable by imprisonment, a fine or both. Repeated offenders will be punishable with imprisonment between 5 to 10 years along with a fine ranging from 10 lakh rupees to 5 crore rupees.
Madhukar ji, I wanted to start the program with you. Can you give us a little bit about a background of what is the business of deposit taking in the country and what does it entail? How does an individual like me or other people who are watching the show, how do they give a deposit and what is the business about?
Thank you. Actually, in nutshell, I can say that there is two segments. One segment where the depositor can put his money to those schemes, which are controlled by some regulation or by some regulators. According to my knowledge, there are 9 regulators of controlling different activities. For example, Reserve Bank of India, for example, SEBI, for example, Insurance Regulatory Authority, for example, the Chit Fund for the Chit Fund activities. So all these regulators have their schemes, and in that schemes the money can be put by anybody. Apart from that, there is another market where you can say there is no regulation, and the agencies who are handling it, they are getting money through the investor by telling three things. Number one, the ease of business. You come to me, I will not have more document to you to sign it. Number two, I will give you better rate of interest which you will not be getting in the banks or regulated market. And number three is that I will return you in time.
Okay.
So because of these three things, the investors are persuaded to put money into this unregulated market.
Okay. Mr. Nag, you've been an advisor to the Reserve Bank of India. So what is the purpose of regulating deposit taking schemes?
See, basic idea of the in Reserve Bank, the regulation of the deposit or regulation of the banking system is that the depositors must have trust to keep their money with the bank. Now, how to ensure the trust? Okay. Now, if I give you money, you may give me back or may not give me back. So, what the regulations of the Reserve Bank is tries to do, when bank accepts money as a deposit, basically I am lending money to the bank. Now, what is the guarantee the bank will give me back? There are two things the Reserve Bank does. They monitor, they force the banks to use of the fund taken from the depositors in such a way that certain money, for example, certain cash reserve ratio, statutory reserve ratio, where how the money will be deployed by the bank, there are certain kind of restrictions. Bank cannot use the money any way they like it. There are a lot of kind of a prudential regulations, norms are there, so that use of the money is for a cause or for a kind of a schemes which are having a certain kind of a the regulations by other kind of a government authorities. Okay, suppose you are doing a project finance, the projects are being regulated or somebody is seeing it that thing. So banks are regulated for the purpose that so the depositors' money is protected, it is not squandered away by the borrower, which is bank in this case. So deposit, another key thing RBI has done, they have done a what you call deposit insurance scheme. That means that whatever money I am keeping the bank, up to 1 lakh rupees, the bank is taking insurance with the insurance deposit in DICGC, and that money will get back if the bank defaults. When the bank will default, bank takes money from me, gives to the borrower, which is a corporate or any home loan or your car loan. So you have to, when I take home loan, I give back money through EMI to the bank, and bank then pays the interest to the depositors. If I default, then bank of course will default. So bank has to ensure that that money is going to the proper borrower, which are networthy and which can be relied upon to give back the money to the bank.
I understand.
So this is the role of the regulator is RBI is to ensure that the end use of the money is as per the regulations act or prudential norms RBI has set, so that depositor money is protected. This is called regulated or part of the entire deposit taking.
Mr. Nag, let me just interest you briefly there. Mr. Sivaramakrishnan, so what Mr. Nag was talking about was regulation of banks when it comes to deposit taking and the safeguards that RBI has provided. But it is not only banks that accept deposits. There are private entities who could also accept deposits which are not banks. You are the president of the Chit Fund Association of India. So there is some deposit taking activity which happens in chit funds also. Can you tell us a little bit about that space?
Having heard Mr. Nath and Mr. Madhukar, it's not this legislation is not the end solution. So after all, there are occasions when even banks have failed.
Yeah.
So failure is part of life.
Yeah. No, if you can just, I completely agree with you. What I wanted to know from you is, what is the landscape of deposit taking in the country?
See, our monetary market is so complex. There is, nth number of solutions. The requirement of the common man, the reach, even the banks do not have reach everywhere. The kind of last mile footfall that we have, even the banks do not have as on today. So it's not the question of either bank or as per the requirement of the ongoing economic civilization, one has to readjust ourselves, and yes, legislation have to be modified.
Okay.
But having said that, what my suggestion is, awareness has to be enhanced first before coming up with complex legislation. See, the financial discipline is very important for any developing country, which means the investor protection is the key word. How do you bring in this investor protection, whether it's the legislation alone or effective implementation with awareness?
Or awareness.
I think that will.
Or awareness.
That
Okay, great. Mr. Madhukar, Mr. Sivaramakrishnan is talking about creating of awareness, and this is something that we were talking about earlier. So what has led to, this legislation being brought to Parliament, and then, Lok Sabha passed it, it could not be passed by Rajya Sabha, so now an ordinance is before us. So what has led to the issuance of an ordinance like this? Was there a lot of illicit deposit taking, where, innocent depositors losing a lot of money to schemes which were not being regulated? Was that the case?
Actually, I can say that probably the government found out that because of the lack of proper control in this market, there are some agencies who were taking advantage of that, and then it was found out that large scale fraudulently money has been deprived of, payment was deprived of from the genuine investors. But at that time there was no law. Law was there under the IPC that you can catch the person who is doing it. But the law was not very clear how to return the money to the person who has lost this. So I think the lawmakers thought that it is better that we should plug this loophole, and that's why this bill was passed by Lok Sabha, and somehow it could not pass muster at Rajya Sabha.
Okay. Mr. Nag, coming to you, you've been advisor to the RBI. RBI is one of the agencies that regulates deposit taking in the country, and there are, Mr. Madhukar was sitting earlier, and I was reading also that there are 8 other agencies which regulate deposit taking. So what is the need for having multiple regulating agencies when it comes to deposit taking? Can't one agency do it at the central level?
See, there are various kind of institutions, okay, and there are different kind of operational kind of there are different industrial verticals. For example, insurance and the banks, they are not just identical things. So you have to have a separate regulator. You can have a omnibus financial regulator, but that doesn't happen because every vertical is so complex. Banking system is very complex. Insurance is its own kind of complexity. There could be SEBI. SEBI is, suppose you are taking a non-convertible debentures. The companies are taking these things. These are sometimes having different, say, equity-oriented, option-oriented debentures. So this has to be, managed or overseen by the SEBI. So there are various kind of financial institutions, which is financial institutions defined by the banks. There are kind of cooperative banks. Then there are the companies under Companies Act. So you cannot have one single kind of agency. It will be too complex, too big to do a thing. So it is required for efficiency purpose to have a different type of regulators. Okay. Because the business of the functioning of those regulated entities are different.
Okay.
Saying that, there is also requirement, of course, interaction, certain kind of a holistic view to be taken for the entire financial sector. That is why we have a Financial Development Council, where all the regulators can meet and discuss what are the common things affect them both. The point, what is important here to understand, that the institutions are regulated, that is fine. But if sometimes fails, what is the recourse available to the depositors? See, in the case of the banking, only thing we are available is that insurance 1 lakh, beyond which you have to lose it. Only thing we are trying to have faith on RBI, that they will ensure that banks don't fail very frequently. If banks start failing frequently, obviously all our depositors will be very, very wary to keep money in the banking system at all. Today, we feel that, first of all, banks are publicly oriented, government oriented. We feel that SBI, if I keep deposit, it will never fail. So It is as good as giving money to the government post office.
Okay. Mr. Sivaramakrishnan, so Mr. Nag is saying that different kinds of deposits require different kinds of regulators. How do these regulations work on the ground? Because we were discussing earlier that a lot of these laws have to be implemented onto the ground at the state level. So how does that happen?
See, the ordinance is, it's a central legislation now, and the implementation is left to the entire state. So there are different regulators in each state, so
which will then implement the provisions of
the state. So
okay, great. It's time for us now to head into a break. When we come back, we will discuss the mechanisms for repayment of deposits that are being established under the ordinance. Welcome back. The banning of unregulated deposit schemes Ordinance 2019 was promulgated on February 21 of this year. The banning of unregulated deposit scheme Bill 2018, which was passed by Lok Sabha on February 13, 2019, will lapse with the dissolution of the 16th Lok Sabha.
The ordinance provides for a mechanism to ensure that those found guilty are able to repay the deposit they have collected from investors. The ordinance assigns one or more government officers as the competent authority. The authority will have the power to attach the property of the deposit taker to be sold to pay back depositors. Police officers receiving information about offences committed under the ordinance will report it to the competent authority. The competent authority will also have to share information on unregulated deposits with the authority maintaining an online central database on deposit takers in India.
I mean, it is disastrous. So the entire, people are losing their entire money. You might have heard of the Sharda scam and all those people, where so many people committed suicides because their lifetime saving, those savings might not look very big to you, 30,000 rupees or 50,000 rupees, but for a poor person, no, that is his lifetime saving, and if that is taken away from him with no hope to return, then it is disastrous. So therefore, and they are being lured away by advertisements, by unrealistic promises and all those things. So it is high time that it is actually a fraudulent and criminal activity, and it is controlled like a fraudulent and criminal activity. So this ordinance bans the unregulated deposits upfront, and then and they collect data also. So I think this unregulated deposit banning ordinance will go a long way in solving the problem.
To further provide for the mechanism of repayment of deposit, the ordinances provides for establishing a designated court in specified areas. These designated courts will be approached by the competent authority to ask for permission to sell attached assets. The money from this sale will be disbursed back to the depositors. The designated courts are responsible for directing the competent authority to make a sale of the attached assets. The court will also finalize a list of depositors and their respective dues.
There is a two-level filtering which takes place. One is it a deposit? A deposit, for example, a casual transaction, I take money and then tomorrow return it. Is it a deposit under this? Would not categorize this, so I hope those sort of issues are not coming into the picture. Second is where we regularly take under a scheme or an arrangement. If it is not covered by any of this regulated, automatically it becomes unregulated, it is banned. So soliciting of such deposits, taking of such deposits, and of course in terms of any other fraudulent non-repayment, for example, that's also getting covered under the ban. Now, does it affect all our normal transactions? Because we take, for example, deposits or loans from our own relatives. There are large number of small entrepreneurs who take money in terms of for their initial investments. Do they get affected? I would say no, it's not so. But the fact of it is because there are certain the definition of deposits do have a lot of exclusions to that. For example, the initial investments etc. are all not covered by this. But the fact of it is also that all these Ponzi schemes etc. will automatically get covered.
The ordinance provides for a mechanism to ban unregulated deposit schemes and protect the interests of the depositors. It also makes amendments to 3 existing laws. These include the Reserve Bank of India Act 1934, the Securities and Exchange Board of India Act 1992, and the Multi-State Cooperative Societies Act 2002.
The Finance Minister in his budget speech in 2016 and 17 had promised a comprehensive central legislation to bring an end to the menace of illicit deposit taking. Mr. Sivaramakrishnan, what are the different provisions of the bill which are trying to counter the menace of this deposit taking schemes?
See, the legislation we already had was, as I said earlier, the Price Chit and Money Circulation Scheme Banning Act, and a few legislations like financial establishments, interest in depositors, but they didn't have enough teeth. That is the need for coming up with this kind of legislation now, which says this is a central legislation obviously, and this has to be implemented by the different states. So the one useful provision I find here is section 9, as you were reading out, the central government to have the data of their own, and in case of any complaint, even if one state refused to act in their particular state, the central has the power to refer to the neighboring state to take action against them. But in my opinion, this alone will not serve the purpose, especially whenever there is a political rivalry or there is a mismatch between the central and the state legislators and or governments. The public are put to suffer. So my suggestion in this context will be there should be a common registrar or a common regulator who can control all the state, and so that the level playing field concept can be put in motion and purpose is fully achieved.
Okay. Incidentally, the Standing Committee on Finance, which had examined the bill before it was passed by Lok Sabha, had a similar recommendation. It had asked for a central regulator. Mr. Nag, can you walk us through some of the provisions which can enable a deposit taker to get his money back that are there in this ordinance?
See, if you look at the ordinance or the bill itself, okay, see, there is a similar kind of a provisions and one already existing act called MPID, Maharashtra Protection of Interest of the Depositors Act. So there is also a same procedure. What is the procedure? Procedure is to have a competent authority, and that is designated court. Competent authority will take cognizance of the crime done which is banned under this act, and they will try to attach the assets, because assets, this money which has been collected obviously has been invested or been squandered away and put in assets. So you have to attach the assets, and the court will be giving the attachment. But point is that if you look at the history of the MPID Act, see the performance of the MPID Act, how many investors have really got the money back in time? If I have invested suppose 5 lakh rupees, and then the company or the persons who have taken the money under this kind of a scheme, banned scheme, and the attachment happens, and then I get the money after 20 years without any interest, just by selling of the assets, I have lost almost principal everything. On my net realizations is a peanut. The point lies in the devils in the details. How do I ensure the attachment leads to liquidations of the assets and generating the money to say give it back to the depositors? MPID Act, the performance does not give the general public that much confidence that it will happen in time. The main issue is India is that the entire process, legal process, which happens in this attachment, then decree, then execution of the decree, it's such a time consuming here, and the people who have taken thousands, say hundreds of crores of money, they will be definitely have the legal power, a kind of a resources to elongate the case as much as possible. Okay, this is first point.
Okay, Mr. Nag, I just have to interrupt you there briefly because I wanted to bring Mr. Madhukar in. Mr. Madhukar, so one of the things that we were talking about earlier is the implementation of the law, and this is something that Mr. Nag and Mr. Sivaramakrishnan are also, talking about. How does implementation happen at the state level and the efficacy of that implementation?
See, somehow I totally agree with the views of my colleagues here, and I wonder why this fundamental say spoke in the wheel has been put into this ordinance. You see Reserve Bank of India, you see SEBI, you see other insurance regulator. They have got all over the country the jurisdiction. Why in this case? They thought it that state should be brought in. Secondly, they have forgotten or unknowingly they avoided that the depositors are not located into one single state. There will be many cases where the a single depositor may be having two different things. So, fundamental thing which they have to correct it, that they have to bring one single regulator to implement that.
Actually, I was reading through the recommendations of the Parliamentary Standing Committee, and it made two recommendations. One was a single regulator which will subsume the work of the state regulators, and the other interesting recommendation that it made was that in cases where the deposit taking is happening, where the case is extending beyond two states, there the central government should take a suo motu cognizance of that particular scheme and then take appropriate action against it. I have very less time left, so I have one final round of questions to all three of you. Mr. Sivaramakrishnan, what is the impact of this legislation going to be on people who are putting their life savings in a deposit?
See, my humble suggestion is, as I said earlier also, if the number of legislation is an indication for the development of any nation, India should be the most developed country, which unfortunately we are not. So, what is needed is prevention. When you talk of prevention, probably some mandatory insurance scheme should come in place. So that depositors' insurance money is in place.
Something to the effect that Mr. Nag was talking about. Mr. Nag, very briefly, what is going to be the impact of this legislation on deposit takers?
See, I would like to just make one more point about the impact. The issue is that the legislation, having a best legislation is not the only cure to the prevention of the act. See, what is important that the depositor must be also educated that whenever you are getting higher return than a bank's return, suppose your bank is giving you the 5%, 10%, 6% interest, somebody is giving you 12% interest, that means
the depositor should ask themselves as to why that is happening. Mr. Nag, I'm so sorry I have to interrupt you there. That's all the time we have in the show today. Clearly, prevention is better than cure. Clearly, the intent of the law and the implementation of the law should go hand in hand. I thank all three of you for joining us on this discussion. It is now time for us to end the show. You can watch our shows on the RSTV page of YouTube. We will be back with a new issue and a new episode. Keep watching Rajya Sabha TV.